Good morning, Ian. How are you?
Hey, doing great. How are you?
We're doing an earlier morning version of recording of the Ian cast.
Yep,
I hope you've had your morning coffee and you're ready to go.
absolutely. Yeah, as always.
And we won't tell people why we're doing this, because I went to do some training and I think I might have hurt my back. So hopefully it's going to turn out okay. Still, I still should be able to continue to read and track stocks and do the Ian cast.
Of course. Yeah, I have faith
Otherwise,
in
you
you.
can step in for me.
Yeah,
I also put out a tweet yesterday, Ian, saying that we would discuss some of the predictions if people had questions on it. And we'll get to that in a bit. However, let's start with our usual roundup. And we were setting this up a few minutes ago and talking about the stock market, which is that there's a definite and really like now pronounced disconnect between, let's call it our stocks, America 2.0 stocks, fourth industrial revolution stocks, and what people call the stock market.
right. Yeah, so the big difference that we've been talking about is, like you said, the America 2.0 stocks, which are usually much smaller companies. Obviously, there are exceptions like Tesla, but it's usually, companies that are worth, I would say, less than 15 to 20 billion dollars, which in these days is not that much for a publicly traded company. Against like the big titans like Apple, Microsoft, Amazon, Google, Facebook, Berkshire Hathaway that dominate the S&P 500 and really all of the big indices. And you can see the divergence there when you look at RSP, which is the equal weight S&P 500 versus SPY, which is the traditional market cap weighted S&P 500. And what that means when an index is market cap weighted, it means that the bigger companies have more of a weight in the index, so they can affect the price of the index more than in an equal weight where every company has the same theoretical dollar amount in the index. So when you look at RSP, which is equal weighted, the smaller companies have a lot more influence in what happens to that index. And recently, we've seen RSP start to outperform SPY as our companies gain more momentum.
Right. And so let's put up this chart, which we've been tracking. We've been talking about this for a long time. So just to give everyone quick background, SPY, which you'll see in this chart, represents the cap-weighted S&P 500. Cap-weighted means the biggest companies get the biggest weights, and they're dominated by five companies: Apple, Amazon, Facebook, Google, and Microsoft, which represent about 25% of the S&P 500. So those five companies determine it. And RSP, as you will see in the chart, and as Ian was talking about, is equal weight. In other words, it doesn't matter what your stock market capitalization is, you get the same amount, 0.2% is what your representation is in the equal weight. And in this chart, you'll see RSP, Ian, is now about 77.5% since the March bottom, since the
Yep.
crash. And S&P 500 is at 66%, so a 11% spread. And then we've also told people that a better indication of what is a good way to track this market is by looking at the Russell 2000 ETF, which is up in an amazing 91.5%
Yeah.
since the March bottom. But you actually mentioned to me earlier that the Russell actually bottomed earlier and is up by your count more than that.
Yeah, it's about 98% as of the current price on Thursday morning. So yeah, there's been a huge, difference, especially recently, between small cap, mid cap, and the big like mega cap stocks. And the Russell 2000 tracks a lot of small and mid cap companies. So that's another good way to gauge how a lot of America 2.0 companies are doing.
Right. And the other ways that we track the health of the market, and you mentioned something to me that I thought was super interesting, which was talking about the number of highs, the median number of highs. Is that the one you mentioned to me?
Yeah, so on the watch list of stocks that I track like the distance from the 52-week high and also the number of new highs in general. And the distance from the 52-week high was like a little under 7% a couple days ago. So like out of almost 300 stocks, the median was like within 7% of a 52-week high, which is really, really great. We don't usually see all the stocks going up at once and that close to breaking into new 52-week highs.
And that is quite different than what we have experienced in the previous, really essentially 4 years, where the S&P 500 cap weighted just kept being propelled up by FANG stocks and those five big stocks. And what you are seeing is really a different way of what we were talking about. In other words, it's the smaller stocks that are really in that list that
Yeah.
you're looking at.
Exactly. Yes, it's much smaller. Definitely, mostly small and mid cap companies.
Right, and I track the 52-week high list daily, and I am again seeing this dominated by a lot of different stocks from a lot of different sectors. And there's the industrial sector is there in a big way. There's sort of newer companies in the technology sector in cloud. So there's a lot of stuff that's going on in the market underneath it. And it goes to something that we have been telling people about now for some time. In other words, if you are invested in America 1.0, which let's say is the S&P 500 dominated by Apple, Microsoft, which is like 12% of that index, you're missing out.
Yeah, absolutely. Yeah, there's so many, opportunities, and more companies keep coming public, and they're all like really, really revolutionary, amazing technology companies.
Right, and there's also, there's also like a lot of excitement in certain areas that we have sort of looked at. The battery space is seeing like a lot of like, just money flooding in, a little bit as well in some of the sort of the more sort of hyped up cloud areas as well.
Yeah,
And there's no way that can be like sustained for a very long time because it's these one-time big, large gains.
exactly. Yeah. So, I mean, there's countless kinds of technologies that are disrupting pretty much every industry. We're seeing some, gain more traction than others right now, but over time, it's going to level out. There's going to be, fintech companies coming public. Like you said, battery companies are right now seeing a big surge, but there's also some other kinds of technologies and energy that are going to do really well. And we've seen kind of flattening out from some of the cloud companies, but that's going to be reignited at some point too. So yeah, I don't think that we're anywhere like near the top for any of these kind of sectors.
Correct. And the reason why I'm bringing this up is because people write me like, "Hey, Paul, what about Snowflake? Hey, Paul, what about Palantir?
Yeah.
Hey, Paul, what about QuantumScape?" And when we are aware of all of these moves, however, as it's impossible for us to recommend a stock that has just gone up in a straight line over
Exactly.
2 weeks by 200 or 300%. It's impossible for us to recommend into that. And generally speaking, our experiences, there is a cycle, if you will. There's up and down movements, and we want to buy into what we call bid up scenarios, where we have some amount of predictability in terms of understanding how the stock is going to rise because people are building positions, and we can see that these big moves that happen very, very fast, they're very exciting, they're very fun. However, those are generally going to, at some point, they're peter out because that amount of money going into a stock all at once is unsustainable. So we're aware of all the stocks that are seeing these big moves. However, some of those are trades. And generally speaking, in our services, we're looking for a slightly longer term. So you're 100% right. Cloud is still exploding in growth. Batteries are just getting going. Nonetheless, there is going to be up and down volatility in this, as sometimes excitement is super high, backs off a little bit. And it then gives you also opportunity to get in and also align yourself. Generally speaking, we get the best gains when the business and the stock are approximately aligned.
Exactly. And then there's other kinds of technologies that, are still not seeing huge amounts of demand and still have a long way to go up, sustainably, like marijuana and 3D printing and things like that actually were not long ago making new 52-week lows and have since like rebounded. And it's, that's another kind of parabolic move, but that's a very good sign because they still are way, way lower value than they were before. So there definitely is more upside there. I can have way more certainty saying that.
Right. We actually have a question on on 3D printing that came in when I asked Twitter, and it comes from Ray, who says, "Well, I agree that 3D printing is the future. I can't see how next year will be the year it will run up. I know the market looks forward, but how are 3D printing suppliers gaining enough installs? I work with many CNC shops, but they're only on prototypes." Um, and my answer to that is that if you look at any big technology or company or industry, Tesla is a great example. They still make a smidge of the number of cars relative to the world. However, they have a greater market capitalization than all of the other car makers combined. And
Yeah.
many people would say that's a bubble or it's irrational. However, to us, it makes sense because the market is looking really with great confidence now, as much as 3, maybe even 5 years forward, and saying, look, the other car companies are going to get wiped out.
Yeah,
And
exactly. And 3D printing is still a pretty young industry. And there's, the cost of these machines is falling like crazy. The cost of materials is falling. And so there's going to be way more opportunities. And we're at like a tipping point where 3D printing is just going to go from, basically modeling and prototype making to actual like manufacturing of consumer goods.
I think this one big difference between regular investors, they want the facts to be right in front of them and be 100% certain. And generally speaking, investors that are investing with big money are looking forward by a lot, by a significant amount, and are willing to take the risk that they are willing to be wrong. And this is a big difference. We are BOP, bullish, optimistic, positive on 3D printing. You mentioned something on cannabis, and I saw this incredible chart um, from New Frontier Data. Let's put this chart up, Ian, and just look at that chart.
Yeah.
So in 2020, cannabis sales between medical and recreational is going to hit $20.1 billion, Ian. And that compares to $13.2 billion in 2019. The same chart, when you look at it, has them projecting $41.5 billion of cannabis sales in 2025. And I will point out to you that there is that red line up on top, which represents the illegal sales of cannabis, which is just only beginning to decline. And if that were to take a bigger tumble faster, these numbers would be higher. The third thing to discuss is the fact that at this point, all of this is largely driven by 2 or 3 states: California, Illinois, Florida, and Michigan.
Yep. Yeah. And I want to add on to that, what you said about the illicit sales, because obviously, that the black market's not going to go anywhere anytime soon. But, I think we can give it a little bit more credit than just dropping a couple billion in the next 5 years. I think that, with the rapid development that we're seeing now of legal marijuana, not only being legalized in more states, but also, I see things every day about companies opening new dispensaries in new areas. And so it's becoming way more widely available. And I think within 5 years is a lot of time for that industry to keep growing and keep taking that market share. So I think the ceiling just within the next 5 years is way higher than they want to say.
And based on those projections, Ian, it's 21.5% compounded annual growth. So that's an extraordinary level of growth, because we're already starting from a very big base. I mean, we're starting from 20 billion. So 21.5% for a number of years means this is going to be a pretty large industry. And the same piece of research that this chart was in, which again comes from New Frontier Data, we want to credit them because they put out actually excellent research on cannabis. They also laid out that after the election, 234 million Americans, which is about 70% of the population, now are going to live in a state that either currently has or is soon going to have legal access to either medical or recreational based cannabis.
Yep, exactly. And that market is continuing to grow. We don't even have it legal everywhere yet. So after that, there's still going to be 100 million people that don't have access in their state, let alone in their town or city. So there's still so much more room to grow after that. This isn't anywhere close to done. It's just starting, and the cannabis stocks seem to be taking notice of that. Finally, after like a 2-year slow, painful crash, it's starting to rebound. And I think that these stocks really have nowhere to go at this point but up over the next few years at least.
And they are now beginning to appear in the 52-week high list in
Yeah.
increasing numbers.
Yep. Yeah,
So
Canopy and Apria I saw made 52-week highs, which is pretty incredible considering where they were recently.
right. It seemed unimaginable. And we have to fully acknowledge that we got the timing of this wrong. And we have sat through a horrific decline. However, we never thought to sell the cannabis stocks in because
Yeah.
the potential growth never changed. The facts never changed. It was still a massive growth industry. The demand for it was always there. And we're on record in every Incast of essentially like being a broken record and saying the same thing, which is that the demand's gone nowhere. This is clearly going to be a huge industry. We can see where they're going to take market capitalization from, which is beer, spirits, and wine and tobacco. And it's just a matter of time. And that is now unfolding pretty much like now, like in the stock market in a big way.
Yeah, absolutely. It's
and this chart,
looking very good.
And then this chart really lays that out in a good way. All right. Cannabis is something that generally we've never spent a lot of time on. And now it's like that trade is becoming very clear. Most people are probably long gone out of it and have now have the bitter taste of potentially having taken losses in it. And I just want to make one point in that this is something that is a little bit unique to us and Kathy Wood and others, which is that when you believe in a sector and you believe in a business that you think has actual growth prospects, we stay in it. We know other people believe in trailing stop losses and all of these things. And we understand, those folks do it that way. Nonetheless, there is the benefit of like, even if you are in a significant loss position in a high growth industry, you can more than make that back, where later on you go and look at where you were, you go, well, it was irrelevant because the growth was so great.
Yeah, exactly. And it's what you said before about being 100% certain of an industry. A lot of people are like 100% certain once the stock is pretty much already, gotten to its, high for the next, couple of years or so, or is going to be flat, like Amazon at 2000 or whatever, or, some other stocks today that have, topped out for the time being or worth trillions of dollars. And now it's 100% certain that they're good investments because they've already made the gains. But the real way to make money in the market is to, go with the trends that you're seeing all across different sectors, different technologies, and you have to be willing to put your money in during, an initial what some people might call a bubble, like with Tesla. People have been saying that for a long time. But if you can see the growth there and you think it even has remotely a chance to develop like its potential, like Tesla with cars and batteries and the whole utility sector, that's when you want to get in. You don't want to wait until it's already given all those gains. You don't want to look backwards. You want to look forwards.
Right. And for that, you do have to tolerate some amount of volatility. And the way to tolerate is to build a portfolio. And we've got what we call the rules of the game. I've done a video on this. Go check back in our channel for what those rules of the game are, which help you endure through these moments. Because the biggest reason why people never make money, whether it be in cannabis or in Tesla or anything else, is because they sold out and they never bought back in.
Right. Yeah. And a lot of people do the same with like crypto. After Bitcoin's had several like 80% crashes and a lot of people gave up.
And that's a good cue for us to move to our crypto segment where this week we're full of charts. Hey, some weeks we have none where it's just, staring in my face. This week we have charts to entertain you with. We should put like cute cats and stuff in it, Ian, and we would have like a larger audience instantly.
Crypto kitties.
Crypto kitties. This is what. Yeah, I actually been meaning to buy into some of that, but it could moon. Anyway, so here's one more chart. You actually sent this piece of research to me. I thought that this is a excellent report. The report by itself is like 100 pages long, so we'll try and sort of unearth other gems from this report. I thought this chart was super interesting, and it shows you, let's throw this chart up, Ethereum versus Bitcoin annual transaction volume. And it says Ethereum is now the dominant settlement layer in crypto and is on pace to settle over $1 trillion in 2020, Ian.
Yeah.
$1 trillion. I can tell you that was just not even, no one could have imagined that. Forget in 2016, people thought, people would have said, you're lucky if that'll transact $100.
exactly.
And now it's at 1 trillion. And that tells you that, the growth rate in crypto is exponential,
Yeah.
exponential.
It's bigger than anybody, number one, even realizes, and two, anybody really thought it could be just a couple years ago. $1 trillion, that's pretty crazy for something that's only been around for a few years. And you have to recognize that this is actually something that's going somewhere. It's Bitcoin and Ethereum are going to be two parts of finance 2.0 and decentralized finance, meaning money transaction all over the world. Just like the internet revolutionized communication, blockchain through Bitcoin and Ethereum and some others is revolutionizing money and the transfer of money.
100%. And this is a good moment for you to repeat, because people like hearing our Bitcoin predictions. And I do want to mention that I don't have the tweet here in front of me. However, someone tweeted me on Twitter and asked me if I've given up on my 50,000 by year end prediction for Bitcoin, and I have not given up. There's maybe it's foolhardy on my part. There's still a few days left till year end, and I mean, I don't know what the last country is that'll bring in the new year, but hey, technically, as long as I've got all the way until then to be right. I haven't given up because Bitcoin is incredibly volatile, Ian. I mean, it was at nearly 20,000 just literally 10 days ago, and then yesterday, it trickled back down to under 18 at 17.6 or something like that. That happens, on a regular basis. But we may or may not be right. Well, I'd say odds are we're probably going to be wrong on 50,000 for Bitcoin in 2020. Nonetheless, we're incredibly bullish, optimistic, positive on Bitcoin. You give your prediction first, and I will give mine next.
Yeah, so my prediction was that crypto as a whole, as an asset class, will hit $5 trillion in value next year. Right now, it's, I think, sitting around 600 billion. So it's almost a 10x move from here. And as everyone knows, I've said this many times, I think Bitcoin will be $115,000 by August. Obviously, that will be a big part of that 5 trillion. I think that'll put Bitcoin around 2 trillion or so, maybe a little higher than that. But we've seen other kinds of sectors, or whatever you want to call them, pop up in crypto. There's DeFi, and there's stable coins, which is basically like putting your dollars into digital form on the blockchain. And I think that stable coins are going to play a big part in this too. And I mentioned to some people already that I think there will be $1 trillion in stable coins on the blockchain next year, which, on Ethereum, which I've described many times as being the Android of crypto. So you can put apps on it, you can transfer money through those apps. People use like the USD coin, which is a stable coin. It's always worth $1. It's backed by dollars. And I think that, a lot of people are going to be putting that into Ethereum to hold their money there, where they can earn way higher interest and do way more things with it. So I think that stablecoins are going to be a big part of that. And obviously Ethereum itself and the growth there is going to be a big part of it. We've already seen about $15 billion go into what's called DeFi apps, where you can essentially loan money, borrow money, and trade cryptos without any kind of financial intermediary. So instead of like logging into TD Ameritrade to trade stocks, you would basically just go onto Ethereum on one of their apps and trade cryptos. And the fees go to the other people around the world that put their cryptos in that exchange to earn trading fees and interest and things like that. So that's just a few aspects of Ethereum. And that's, the first real development that we've seen be used in the real world. So I think between Bitcoin, Ethereum, and stablecoins, I think that $5 trillion is well within reach for crypto.
And before I get to my predictions, you sent me an article today which is from CoinDesk, and we'll just put up the headline, which has one of the world's oldest banks is issuing a euro stablecoin on Stellar, which is a blockchain crypto, and it's the Germany's Bankhaus von der Heid. I don't know if I'm getting the pronunciation right, but nonetheless, that's my best shot at it, Ian. So, I mean, this is really starting to spread out in a lot of directions. And while you were talking, I also went and looked up Bitcoin's market cap based on, the idea that all the Bitcoins are still around, which many people say like as many as 4 million are gone
Yeah.
for many reasons. So it should probably be, adjusted for that. And some people do that is $333 billion is for Bitcoin. And the entire crypto market is only worth $533 billion in
Yeah.
a world where Apple stock by itself is worth $2 trillion.
Right.
Yeah, right. And
Exactly.
so is Microsoft, $2 trillion. And then there are a
Yep.
number of trillion-dollar stocks, all of the world's equities, stock market, something like 70, 75 trillion. Gold by itself as a metal, 9 trillion. Gold equities might be another trillion. In other words, crypto is so small at this point in time.
It's absolutely tiny. It's pretty crazy. And if you take out Bitcoin, the rest of it, is only worth like 200 billion with all of this amazing technology and ability to, basically have a whole financial ecosystem that doesn't involve banks is pretty amazing. And from $200 billion, like, first of all, a lot of people never thought that it could reach this point. But I would say that at this point, it's kind of inevitable that this is where things are going. And at $200 billion, it's like a steal to buy into it.
I 100% agree and want to mention two predictions from our incredible, terrific, fantastic colleagues, Patrick Goodridge and Tamara Barkanoy. Patrick talked about at least one company that's in the Dow. In other words, perhaps an America 1.0 company buying into Bitcoin as cash reserves. That was one of Patrick's predictions. And
Yep.
Tamara talked about the potential for smart contracts, maybe as many as 70% of, I believe it might have been mortgages going through smart contracts by the end of next year. That would be an incredible transition, and the volume in Ethereum would just explode. I mean,
Yeah.
it would be in the trillions and trillions. It would probably be like 5 or 10 trillion. So
Right.
exciting times for crypto. And my prediction, before I forget, was that I believe that Bitcoin is going to go to $250,000 in the next 1 to 3 years. And that is based on the demand and supply dynamics, a number of models that suggest that relative to the halvening. And it does seem like the demand side is coming out. And I also made another prediction about crypto, which is that I believe that a sovereign nation, a country, is going to adopt Bitcoin as their official currency.
Yep.
And I've been challenged, Ian, by a number of people on YouTube on the prediction video as to why a country would do that.
Yeah. I mean, yeah, a lot of people are still very skeptical of Bitcoin being used at that level, but I've seen a lot of countries talk about having some kind of, Bitcoin standard or crypto standard in general. And that's not going away. It's going to continue to go there. And I could 100% see a country using Bitcoin as kind of like a backing for either like a stable coin or some kind of other currency that they would use just in regular circulation. And a lot of the currencies in the world, I mean, America is one of the few countries that has like an actual legitimate, good, stable currency. So I would say that it's pretty likely that some country somewhere is going to look to crypto next year, 100% certain that that's going to happen.
All right, now I've told the story on the YouTube channel that how when my father eventually had a little bit of money, you didn't know what to do. You could never save your money in Indian rupees,
Yeah.
and because that's always on a track to zero, either on a 5-year basis, 7-year, 10-year basis, because the government always inflates the value away. So people in India in my dad's time would only be able to either invest in gold or land because those things, there's some level of scarcity to it. Bitcoin is scarcity that can actually be calculated. It's
Yeah.
very finite, it's trackable. So it's very attractive as an asset in that way. And the vast majority of currencies, as you said, are really junk. I mean, they're on their
Yeah.
way to zero all the time, which is why the people of the world have had no alternative. Bitcoin is universal. If you have a phone, you can access it. People are buying it in Nigeria. You have been tracking the international sort of
Yeah.
adoption and acceptance of Bitcoin.
It's amazing. Yeah. It's like tens of millions of dollars every week are being transacted, not even on the internet, but from person to person. Like people meet and will transact Bitcoin. So it's pretty incredible what we're seeing on like the global level, even where there's not like widespread internet access. People are still, desperate to get out of these terrible currencies and to get into something that's more stable, easier to buy, easier to transact with in general, and easier to hold on to, because we've seen even when people have gold, we've seen a number of times around the world, the governments will take it away anyway. So
Right. And Bitcoin has advantages over gold. Gold is somewhat finite. However, its supply increases by 2 to 3%. And I believe gold is going to lose a significant amount of its premium that as a result of people storing it, that scarcity will go away. And I believe that money is going to flow into Bitcoin. You can't carry enough gold in your hand. It's also a security risk for you to carry it.
yeah,
Bitcoin can be carried in your phone.
yeah,
It can be carried on a piece of paper. Really, you could have your keys on a piece of paper. So there's
yeah.
many different advantages to Bitcoin over gold. And you saw that article that I sent you about where in Cuba at present, because they're essentially experiencing a collapsed economy, Bitcoin has become the de facto currency.
Yeah, that's pretty impressive that, they're already looking to Bitcoin. And yeah, I think it's just the beginning.
And you could argue that Venezuela theoretically also
Yeah,
essentially, which
true.
is another economy that is in sort of collapse, chaos. The de facto currency there is Bitcoin as well. So, however, I'm on record as saying that a country is officially going to actually adopt Bitcoin. So we shall see what happens. All right, that's our regular roundup for the most part. One question that came in on crypto, Ian. And this came from Jim and said, if crypto forking is meant to create a better version, could the fork be considered a threat to the base crypto value if developers or investors use the fork crypto instead?
Well, we've seen, a number of forks in Bitcoin. Bitcoin Cash is the biggest one, and then Bitcoin SV is another. I think that actually came from Bitcoin Cash. So those are just a couple that have been successful out of like the dozens that haven't really done anything from Bitcoin. And, none of it really affected Bitcoin's value. I don't think that, Bitcoin is going to be used as like, a typical means of exchange. I think that's going to be more either like stable coins or something in Ethereum. And there's like always ongoing work in crypto in general to make payments better and faster without using forks. So I don't think that would be something to worry about at this point.
Right, and I believe that Bitcoin Cash actually did go through a somewhat controversial fork recently,
Yeah.
and the Bitcoin Cash price did decline. However, our view is that we're still in the early stages of crypto. There will be some growing pains. There will be some difficulties. However, there's been no real complete disaster
Yeah.
in crypto yet that many people maybe were hoping for, wishing for, or have theorized might happen.
Exactly. And Litecoin is another Bitcoin fork. That was what I was going to add. That's, so some Bitcoin forks can stay successful. I think Bitcoin Cash and Litecoin are still like in the top 6 or 7 cryptocurrencies based on total market cap. But, they're not really taking away from Bitcoin in any way.
All right. So that we keep this incast a reasonable length, let's move on to Tesla. We are BOP on crypto, Bitcoin, Ethereum, crypto in general. Believe that 2021 is going to be a launch year where you will really see the impact of this technology and platform across industries, sectors, and economy. All right, this one is on Tesla, which is our other regular topic on the Incast. This one comes from Digun, and it says, can the S&P 500 related funds buy Tesla before December 21st, or do they have to buy in one shot on the 21st?
Well, Tesla is being added to the S&P 500 all in one shot on the 21st, but companies, the ETFs aren't going to be buying like billions and billions of dollars worth of stock on that day. They're going to be, they've been buying in over the past couple of weeks. And so in answer to your question, no, they're not going to be all buying in on the 21st itself. It's a gradual process. And then Tesla itself will be added all in one shot on the 21st.
And I was just looking at the news because Tesla, which I believe is related to this, has issued a bunch of stock, about $5 billion of stock, which I believe is going to end up with investment bankers who will feed it to the ETF market makers
Right.
to put it in there. So there is a certain mechanism in the market just to make sure that these kinds of things aren't completely disruptive
Yeah.
to the workings of the market. But however, in terms of its entry into the S&P 500, it is on the 21st. Exactly, its impact, generally speaking, our experience is that its impact is priced in prior to the event.
Yes.
So people who think that somehow magically on the 21st, Tesla is going to soar by 50 or 70%, we would tell you that is very unlikely. And generally speaking, markets work on the mechanism of any piece of well news, by the time the news happens, is discounted. That's called buy on the rumor, sell on the news. That's what it's referred to. So we would expect that to be the case. All right, we want to close. There's not a lot of time left, but I did want to bring this up, Ian, because I thought it was somewhat amusing, which is that I read this headline, and I mentioned it to you. Tesla, which is now trading at around $650, got, and listen to this, Ian, it's from JP Morgan, got a $90 price target, Ian, $90.
Yeah. Generous.
$90. I think I might have to use my calculator to figure out what a decline that is. I'm thinking, does the analyst have access to the internet? Like, can he check the price? Or do you think like this was done like from a cave someplace?
It was 80 before, so at least he's, coming around finally.
I have to say that even Elon, I watched an interview, is suspicious of the market's ability to understand and discount the future. And he's constantly saying, our stock price is too high. However, when you go back and look at all the transformative companies of our time, Amazon, Google, Netflix, the market saw what people today acknowledge well ahead of people seeing it.
Exactly. And you could argue too that Tesla, has the same like long-term kind of trend as Amazon or Netflix or Google, but it just did it all in like two bursts. And then it was, in between it was flat for years. So whereas Amazon, Google, Apple are all like straight slopes up, Amazon or Tesla, for whatever reason, just did it in 2-year periods or whatever. But yeah, it's amazing, like the way that the market is able to see that. And Elon's funny with that too.
and so are, the various cults, Tesla Q and the people, the hedge fund managers that insist on going bankrupt by shorting it, but nonetheless, we have done, sorry, we were unable to get to all the questions. We tried to keep it sort of on track with what we usually discuss on the Ian Cast. Nonetheless, Ian, this is your chance. If you forgot to say anything, wanted to mention anything, to get it in, this is your last chance before you can say goodbye.
Yeah, so real quick, I didn't go over my other prediction, which is not as in depth, but it's related to cannabis, and I forgot to say it at that point. So I just want to get that in. The MJ ETF, I said this year was going to double. I was totally wrong, although I believe at this point it is almost flat. So even though it was looking really bad at one point, it's come back. Next year, I believe that MJ will hit $40 a share for all the reasons we mentioned earlier. Just the quick kind of transition we're seeing in the market in cannabis stocks, and also the widespread legalization and growth within the U.S. market.
And I talked about 3D printing and being a breakout year. However, I'll talk more about that in my regular Bold Profits. All right, Ian, you get to say goodbye first. I'm going to go next.
All right, everybody. Thank you so much for watching. Happy Friday and have a fantastic weekend.
And same for you. Thanks for watching the Ian Cast, and we'll have another one of these next week. Want to tell you to subscribe to the channel, give us a thumbs up, comment below on anything that we've said, anything that you would like us to answer in next week's Ian Cast. Until then, this is Paul saying bye.